Alright, family. We back at it again. Let's get it started. Alright, family. Welcome back to another edition of Melanie Government News. The time is 3:46 a.m. At the time of this recording, it is October 15, 2020. Alright, we're going to get it started. We're going to check out seekingalpha.com. Alright, look at the futures. Alright, the Dow futures are down negative 133. Alright, the S&P futures are down 12.67 points. The NASDAQ futures are down 115.36 points. And crude oil is looking down about $40, looking down 27 cents to about $40.77. All right. We'll take a look at some of these commodities over here. Natural gas is up 6 cents to $2.69. Regular gasoline is down a penny to about $1.19. Corn is up about $3.75 to $389.75 a bushel. Soybeans is up 50 cents to $1,057 even a bushel. And copper is down less than a penny to about $3.04 an ounce. Alright. Take a look at some of these world markets right now. The FTSE 100 is trading negative about 122.98 points. The DAX is down 289.98 points. The CAC 40 is down 80.33. The global Dow is down 25.01, and the Nikkei 225 is down 124.49. All right. So let's switch over to Kitco.com. We'll take a look at the spot price for precious metals. The world spot price. All right, we'll take a look at gold. Gold is at a change of up to 30 cents to about asking price for $1,902.50. Silver is down 11 cents to $24.25 an ounce. Platinum is down $2 to $864 even. Palladium is up $3 to $2,403 even. And rhodium is unchanged at $12,800 even. Alright, so we're going to get into the news. Alright, family, we got some big one here. Alright, this is from Hedge.com, okay? Alright, Fed Vice Chair makes shocking admission. Fed may never be able to stop manipulating the market. So the Federal Reserve has come out flat out admitting that they manipulated the market. So if anybody tell you the market is not rigged, this article here explains that the Fed is admitting that they manipulated the market and they won't be able to stop. Alright, yesterday, San Francisco Federal Reserve Chairman President Mary Daly, D-A-L-Y, made a stunning admission. Just in case there was any confusion, the Fed knows that it has and continues to blow an asset bubble, making a few who own stocks uber rich, but the economy is now so reliant on the Fed liquidity fire hose that the moment the Fed threatens to pop this bubble, which some have estimated to be around 90 trillion in liquidity, would result in economic devastation and leave millions without a job. All right. They're flat out admitting that the Federal Reserve is manipulating the market. So the markets are rigged, family. All right. I'm not willing to trade millions of jobs for people who need a ladder up in order. Read that again. I'm not willing to trade millions of jobs for people who need a ladder rung up in order to keep their stock market from going up for a few who have those holdings. Daly said while answering questions following on speech. What else? Racial inequality at a virtual event Tuesday hosted by University of California, Irvine. All right. All right. So we switch down the article a little bit. All right. In short, there is no longer market risk. There is only central planning transactions, which only happen with the explicit blessing of the Fed, which can pull its backstops on a whim and crash trillions in assets in a nanosecond. All right, that's right. So the Fed, if they pull the mark, they pull the rug out. People, it's a wrap. All right, they've inflated the market so much that if they pull it, it's a wrap from there. All right, family. All right. So basically, we skip down the article. It says, in translation, the Fed can never again step away and stop manipulating the bond market, which, by extension and through the risk of premium, is the market which defines every other market, including stocks, commodities, foreign exchange, and so on. All right, foreign exchange FX. All right. All right. So we have another article from ZeroHedge.com. This is what's going on. You don't hear about you hear about small businesses collapsing and they're closing, but some of the big boys are being hurt too. All right. 10.6 billion hedge fund closing after massive value losses. All right. We skip down the article a little bit. As such, it is certainly not surprising that one of the prominent quad fund, the 10.6 billion Philadelphia-based AGO Partners, which bizarrely even names all of its 51 clients, will shutter after suffering steep losses from its value strategy, according to Bloomberg. In a letter from founder Ted Aroson, Aronson, the firm announced that it would stop trading on November 30th, putting a 36-year-old firm out to pasture. We still believe there is a future for value investing. Sadly, the future is unlikely to arrive fast enough for us, wrote Arison, who plans to retire. And it's funny how when things go bad, a lot of these hedge fund people, these billionaires, start retiring. All right, ahead of what's really coming. A better part of valor is to return the assets and call it a day. Arison added. Our clients are exclusively largely sophisticated institutional clients, so they have superior alternatives. Castellavalle. All right. The culprit behind the shutdown was the fund 1.5 billion AGO large cap absolutely value strategy, which tumbled 15% this year through September. The fund's biggest holding as of June 30th was Intel, which had a terrible year. All right, which in isolation is not disastrous. The Russell's 1000 value was down 12%. All right, but when compared to the massive outperformance of growth, well, it has one to be impressed with the patience with the patience of the fund's LPs. All right, AGO was also established in 1984, which offered a range of systematic strategies built from factors including value, which, however, has proved to be a dismal strategy in a deflationary world where over $10 trillion bond trades trade with a negative yield. All right. As a summary of the top 25 publicly closed AGO had as of June 30th is shown below. We expect many, if not all of these, are currently being aggressively sold off. All right. So they got a bunch of these markets down here, family. Go to this article, ZeroHedge.com. 10.6 billion hedge fund closing after massive value losses. All right. And then we get into some other real news. All right, more real numbers coming out. All right, we get here, and we're looking at from. All right, we go to Shadow. This is from John Williams. All right, John Williams is ShadowStats.com. All right, John Williams, ShadowStats.com. All right, we start off on an article from October 6th. August 2020, real trade deficit. Goods deepens more than expected on the top of negative revisions. Softening third quarter GDP outlook. All right. So reality speaking, the calendar year third quarter ended July 30. It started July 1st and ended September. Actually, no, I'm wrong. The calendar year in quarter terms, the first quarter, January 1st to March 31st, April 1st through June 30th, July 1st through September 30th. All right. And then the fourth quarter calendar year, October 1 through December 31st. So right now we are in the we're in the fourth quarter of the calendar year. This different fiscal year, family. All right, we went over this kind of before, just a little bit of a reminder. But the third quarter, its numbers are coming in. All right. So we're looking to this article right here. All right, Census Bureau of Economic Analysis. The August 2020 nominal U.S. trade deficit deepened by a greater than expected 3.7 billion to 67.1 billion. All right. More significantly, the inflation-adjusted real trade shortfalls in the dominant goods sector widened beyond expectations, signaling a worse than expected shortfall in a worse than expected shortfall. Fly just passed, family. Sorry about that. All right. And a shortfall in the real third quarter net exports, which should translate into somewhat reduced expectations for the rebound pending third quarter GDP. Expanding detailed graphics. All right. On this and other recent economic releases following the pending. All right. And then we got one from October 8th. All right. The annual growth softened, still disrupting reporting of adjusted weekly new claims for unemployment insurance. Week ended October 3rd. All right. Following upward revisions claiming the prior week, Department of Labor or DOL recently accounting for 27% of national claims. All right. California is the second and final week of not processing new claims to reduce its claim processing backlog. The Department of Labor is using a weekly plug estimate of 226,179 claims for California, subject to later revision. There you go, their revision stuff. They're going to revise numbers again. They give you one number, then they come out with another number. All right, that said, allowing irregular volatility and current adjusted annual gain of 328% in weekly new claims versus upward revised 363%. All right, previously 355%. All right, the prior week continues to stagnate around 360% to 370% range of the last 9 weeks, consistently with involving an L-shaped economic recovery. ShadowStat uses the unadjusted year-to-year change data for analysis here, since the headline seasonal adjusted Department of Labor DOL numbers are intentionally inconsistent. All right, so there we go, family. More real numbers are coming out. All right, we got the Fed admitting that they need to continuously manipulate the market. So once again, everybody tell you the market ain't rigged, they're full of it. All right, we got some big boys closing, big hedge fund managers are closing. Everything is going down here. All right, family. So once again, if you like the video, you like the news, please like, subscribe, and comment. All right, family. Once again, take care of yourself. All right, be easy. Become your own banker. Become your own savings and loans. Become your own credit union. All right, family. And remember, pay yourself first. All right, take it easy, family. All right. Be one forever without question. All right. Let's get it started.